Hello dear students, income and expenditure account I taught you in the last class. Pro forma is over, one problem also we have completed from the non-trading organizations in financial accounting. Today we will see second problem. Remember, always income and expenditure is just like profit and loss account. You know, in the previous problem some information was given, from that we have prepared income and expenditure account. Today's problem, receipts and payment account is given. Receipts and payment account and also additional information. Just like final accounts generally trial balance and additional information. Here receipts and payment account and information. From this we have to prepare income and expenditure account. If you can prepare this, I can say that you are understanding well, then you can go for the balance sheet and few more problems we'll see. Anyways, let's focus on today's problem. So from the following receipts and payment account, R&P means receipts and payment account, prepare income and expenditure account. Heading also you have to give the same one, income and expenditure account. So first we'll read all these transactions and additional information, whatever we have adjustments, we'll put a tick mark over there so that we'll not miss any transaction. So receipts means it comes on the credit side. There it is debit income and expenditure account, receipts and payment account debit side. Here it comes on the credit side because receipts income. Here payments and expenditure. Debit to credit, credit to debit. This you remember. Okay, now we'll see there everything. First receipt side, donations. Donations 35,000. It's a big amount. When you see all the numbers, when you see the amount, general rough amount, 35,000 is a big amount. You know that I already told you, donations are two types, small donations, big donations. Huge, large amount of donations are there, that is to be capitalized. That we cannot take it into the income and expenditure account. So 35,000. Anyway, in the additional also it is given. Capitalized donations means donations are to be capitalized. Capitalized means in balance sheet we have to take, not in income and expenditure. Though it is not given, we could have taken into the balance sheet only, but end of the problem we have to write note, donations are capitalized. Note, donations are capitalized. That you keep a note so that very clear. Anyway, so donations, balance sheet liability. Membership fee, entrance fee, all are incomes. We'll take it on the credit side. Subscriptions, it is also income. Sale of furniture, when you are selling furniture, so it is, we are getting income of 1650, but the cost of the furniture is 2000. 2000 we are selling for 1650, means loss. Loss will take it into the expenditure side. Loss, they are not saying you to calculate loss, but it is understood. Such kind of hidden adjustments you have to understand and calculate. Next, interest on investments, income, credit side. In the same way, now here furniture is asset, we don't consider here. Rent and taxes, it's expenses. Salaries expenses, printing and stationery expenses, scholarship payment is expenses, newspaper, purchasing newspaper is expenses, government bonds, it is balance sheet asset. Purchasing any bond, purchasing furniture, purchasing machinery, any fixed items, if you purchase it, it doesn't comes in the income and expenditure account. Same like profit and loss account. In profit and loss account also we never used to take any kind of assets purchased. Here also we will not take. So government bonds, balance sheet asset. In the same, books purchased, this is also balance sheet asset. Furniture is also balance sheet asset, it doesn't comes. So these three are balance sheet asset, we won't take it into the income and expenditure account. And now coming to the adjustments, we'll put a tick mark wherever adjustment is there. Outstanding subscriptions for the year 19 to 20, 2500. Subscriptions are given 3 years, 18 to 19, 19 to 20, 20 to 21. Current year is 19 to 20. So this is outstanding subscriptions. Related to this, there is an adjustment, outstanding receivable. This we are going to add to the 7,500. Last year and next year we don't consider into the income and expenditure account. You know that income and expenditure is related to present year only. Okay. Next, prepaid rent. Where is rent? Rent is here. There is an adjustment for this. Prepaid. Paid in advance. We don't want prepaid in the income and expenditure account, so we will deduct this from the rent. If it is outstanding rent, we would have added payable, received, prepaid. Next year amount we have paid, prepaid. So prepaid we don't want, so we are going to deduct it. Next, outstanding stationery. Where is stationery? It is here. Outstanding means payable this year only, so we'll add it. We are going to add this. Next, cost of investments 10,000, interest rate is 10%. Total investments cost is 10,000. Interest rate is 10%. 10,000 into 10%. It is 1,000. 1,000 is the interest, but already interest on investments 800 paid. 800 already paid. Paid out of this 800. 1,000 we have to pay as per the calculation, but in receipts and payment account they are showing 800 paid. 800 paid means what about this 200? This is payable. Payable is 200. This is also hidden adjustment. They don't tell you that there is a interest payable 200. We have to calculate whenever interest on investments is there. See the investment amount, interest amount. Investment amount is 10,000, interest rate is 10%. If we calculate, we got 1,000. And how much is paid? 800 paid. Means payable is 200. Understood? 1,000 minus 800. 200 is payable. That is we are going to pay. So this is one of the hidden adjustments. Now all these, we'll put a tick mark like this so that while posting we'll not forget anything that there is an adjustment. Okay, this is over. Now we'll post it directly. Payments comes to expenditure. Okay, first credit side items, we'll write it on the debit side, but we need to be very careful. So furniture asset, balance sheet asset it comes, so we don't consider. Rent and taxes, we'll take it to rent and taxes. Rent and taxes is adjustment is there, that is why I have rounded with blue marker. So I'll write it in the inner column 5,300. Rent and taxes, what is that? Prepaid rent, related to the rent. Prepaid rent. Prepaid means next year's we are paying now only. We don't want that, so we'll deduct it. Minus prepaid. Minus prepaid rent 1,300. So it is 4,000. Next, salaries. Salaries is expenses. We'll write it on the debit side. 2 salaries 5,800. Next, printing and stationery. Blue ink we have marked, it means there is an adjustment. So we'll write it in the inner column. Printing and stationery. P and S means printing and stationery 2,200. What is that adjustments? Printing and stationery. Outstanding stationery, payable. Outstanding, we have to pay. So add outstanding stationery. How much? 300. So 2,500. Over. Salaries are over. Printing is over. Rent and tax is over. Next, scholarship payment 3,000. It is also expenditure. Scholarship payment. Scholarship payment 3000. Next, newspaper, purchasing newspaper, it's a payment. So newspaper 900. Government bonds, asset, balance sheet asset, it doesn't comes here. Books purchased also asset, balance sheet asset, that's all. Credit to debit side, it is over. Now debit to credit. Debit side, what is there? Apart from balance brought down, donations. Donations is to be capitalized, means take it into the balance sheet liability, ignore it. Next, membership fee, it's a income. All incomes, receipts means incomes, that we are writing debit to credit. So what is that? Membership fee. Membership fee 1200. Then entrance fee, this is also income. Entrance fee 1500. Next, subscriptions. Subscription, there is an adjustment, so we'll write it in the inner column. Subscription 7500. What is that? Outstanding subscriptions for the current year. Outstanding means receivable. Receivable means we'll add. Add outstanding subscriptions. How much? 2500. So it is 10,000. If we add, subscriptions are over. So membership, this, subscriptions are over. Next, sale of furniture. When you sell a furniture, so we are getting profit or loss, that we have to calculate. So in working notes also you can show, its cost is 2000. 2000 we are selling for 1650, means loss. If you are selling more than 2000, profit. Less than that means it's a loss. Loss will be in the debit side. To loss on sale of furniture. It is 2000 minus 1650. 350. Next, interest on investment. This is also adjustment is there. Interest on investments, it is mentioned. Interest on investments already paid to 800 only. Actually it is 1000. Out of 1800 paid. Still, if you see the interest on investments, this interest on investments, you know that calculation already I have told you. So total interest we have received 800, but actually it is 1000 rupees. 1000 we have to receive, but we received only 800 only. So 200 is not payable, this is receivable. It's on the debit side. Debit side means receipt side. So received is 800, receivable is 800. Okay, clear? So interest already received by interest. Interest on investments 800 we have received. Still receivable 200. Add outstanding interest, we can say. Outstanding means receivable 200. So 1000. That's all. This is the problem. Now we'll see the calculations. First we'll calculate it on the credit side. 10,000, 11,000, 12, 13. 13,700 credit. 13,700. Now debit side, if we see 4,000 plus 5,800 means 9,800 plus 5,500 plus 900 plus 350. It is 16,550. Debit side is 16,550. It means debit side is more. So we'll write that amount both the sides, 16,550 So difference, if you see 16,550 minus 13,700, it is 2,850. This is the deficit. What do we do? Deficit, it will be transferred to the capital, which will be in the balance sheet. Okay, so just take a screenshot or note down. Let me give you once again recap. Always remember, receipts means income, payments means expenditure. So expenditure, income, that we have to write it very clearly. Adjustments are there, please make a note that there is an adjustment so that we don't forget it. Now let us recheck it, or let me give you 5 minutes recap of this problem. So debit side we have receipts. Receipts is donations. First one, donations, as you know that it is to be capitalized. So balance sheet liability, it will not comes in the income and expenditure account. Membership fee, entrance fee, these are all incomes. Okay, we have written membership fee, entrance fee, and subscription. Subscription current year only we have to take. Current year outstanding subscriptions means receivable subscriptions 2,500. Present we are receiving 7,500, still receivable 2,500, total 10,000 outside. Next, sale of furniture. When we are selling, asset value is 2,000, but we are selling for 1,650 only, means loss 350. This is a hidden adjustment. 350 loss is written on the debit side, loss on sale of asset. If we would have sold for more than 2,000, like 3,000, 4,000, then we would have got profit. Profit will be on the credit side. Next one, credit side, if you see furniture is asset, balance sheet it comes. Rent and taxes, there is an adjustment. What is that adjustment? Prepaid we don't want, deducted. Salaries, return. Printing and stationery, there is an adjustment, printing and stationery. Outstanding, payable, so added here. Next, scholarship payment, that we have written as it is. Newspaper also expenses, so paid. Next, government bonds is asset. Books purchased is also asset. That's all. Simply we have posted everything. Now here you can do one thing, working notes you can show. Working notes. Working notes. First point, calculation of interest on capital, interest on investments. Calculation of interest on investments. Investments cost is 10,000 into 10%. It is 1,000. So like calculation, okay. So it is 1,000. Paid, you can write it here also. Interest paid is 800. So still payable, outstanding interest payable 200. How do you got 200? 200 is the difference between 1,000 and 800. Actually paid 800 only, you know this. 800 we have paid already, but payable 1,000. This is to be paid. 800 paid means still payable 2 more 100. So this you can show it in working notes. And also loss on sale of furniture, this is also you can show it in working notes. Calculation, okay, calculation of loss on sale of furniture. Cost minus sale value. Cost is 2,000 minus sold for 1,650 is equal to 350. 350 is loss on sale of asset. Like 2 working notes you can show. And also third working notes, third point you can say donations are capitalized as they have said. If not mentioned also, you better mention in the working notes. Okay, donations are capitalized. Simple. So lot more problems we will work out Only the thing is you have to use the logic, understand the concept, post it properly, put a tick mark so that it is very much clear. And in the coming classes, we will work out some more problems. And you know that in the description box I have given a lot of subjects, lot of playlist. Please go ahead, watch it, learn it and do help to someone. Okay, shortly I am going to come with another topic, another interesting income and expenditure account topic. Till that period, just take care of yourself. Okay, so stay connected, do share these videos with everyone who is struggling to learn the subject. So take care, good luck.